Ramkrishna Forgings joins us on the show. Thank you very much, Mr. Sharda, for joining us. Your stock has given very good returns, but when you spoke to analysts, you are speaking of challenging times. The markets for forgings itself, is it likely to see some continued difficult times in 2016 as well?
Yeah, good morning, Lata. If you see 2015, first half has been excellent. But globally, if you see, there are some reductions and inventory adjustments which are going on, which is affecting the industry per se. So we are also, to some extent, we are affected. But as we are moving slowly and our project has just completed and we have just started 12,500 ton press. So we were not that severely affected because we are going with new product line and new concept and we are going to address to the new markets. So we hope that this is one-time inventory adjustment which will last for another 1 or 2 months. And again, then global demands will pick up. On the other side, if you see the domestics is looking very good, excellent, rather I would say. And in the fourth quarter, we are seeing very much pick up in the domestic demand. So which will support the industry per se. And we presently more on the domestic side concentrating and export getting up in the second half of the next financial year. We hope the business will continue to grow at 40 to 45%, which we have been doing for last 2 financial years.
The split between domestic and foreign business?
It is typically 50-50, and this year itself it will remain at 50-50, and next year when we are again going up by more than 40-45%, it will again go up. It will remain at the same ratio or may go up even.
Okay. Mr. Sharda, good morning. Last time when we spoke with you, you had indicated that your top line will rise from current 750 crores almost to 2,000 crores over the next 2 years. Would you still hold on to that guidance?
Yeah, if you see the capacity addition side, we are already having this capacity available to do. What we need is basically the global market to support. So 17-18, we are very much on that line and we are closer to that number.
You know, in the domestic market, you are expecting to do better. Are you expecting a bigger market share or are you expecting the market itself to grow?
For us, it's both ways. Because as I told you, we have just started 12,500 ton press. So we are starting with domestic market. We have started supplies in the current month. And we are hoping that in the next quarter, we will supply from that press to the domestic market. Plus, the domestic market also looks very positive in the last quarter. Yes. So both the things taken together will support the top line growth.
Let me just revise your number. You said you expect a 40 to 45% growth in volume?
Yeah.
That is
year on year. For next 2 years, we are looking at 35 to 40% growth in the volumes.
Over 2 years?
Yeah.
Okay. And this is just domestic, or you're speaking about your entire
I'm talking about the global company as a whole.
Okay.
You were talking about, a slow pickup in global demand. This is a problem that some of your peers like Bharat Forge are also facing, the way the US Class A truck orders have fallen. Can you tell me, by when do you think the export market of North America will recover and how is the situation there currently?
If you talk about currently, situation is not great. But what the indications we are getting from February, what we are getting the indication that things will start improving. So we are not very bullish on this quarter, but we hope from the next financial again the levels will improve at least because if you see first half has been very excellent for North America and second half has been poor. So again that balancing will come and you will see that next year first half will be better than the second half of this current year basically.
Okay. Like many companies like yours, you'll have done exceptionally well on margins in the first half. Is there scope to do even better? Will you do better than 20.5% margins?
Lata, it is for my business, for margin improvement, I need 2 things. One is the product mix, which anyway we are improving going forward in next 1 year time. So that will help us in improving margin. Second is the operational leverage. If my utilizations levels are good and global markets are good, definitely my margin will improve from here significantly.
Okay, just one final question from my end. You spoke about this 12,500 ton press. By when will it start delivering volumes and what will be the quarterly run rate of the volumes?
It has just started in December, typically. And as I told you, we are concentrating with domestic market to start with. And once the export market comes in, so in the second half of next financial year, basically 16-17, you will start seeing decent set of numbers from that press.
You know, you supply forgings, we understand, to railways, automobiles, defense, mining in the country.
Right.
Which is the sector that is giving you maximum hope?
Typically, Lata, we are primarily in auto. These are the other sectors which we do, but we are primarily in auto, and we feel auto is in India. It is going to be very, very positive in next 1 or 2 years, definitely.
All right. All the best for the quarters to come. Thanks so much for joining us and giving us your view. So that's the word coming in from Ramkrishna Forging. It's been a great company.